We'd like to welcome everyone to today's webinar, Mid-Sized Companies, Paycheck Protection Program, and Loan Forgiveness. We know there are a lot of questions with everything that's coming out right now, so this panel today will help give you some insight and answers to the questions that you have. So a little bit of housekeeping. If this is your first time using GoToWebinar, you can listen in either by dialing in on your phone or with your computer speakers. We're going to be taking some questions. So like I said, I know that there's a lot of questions associated with this. So you'll see there's a questions box here. Go ahead and type in whatever questions you have. We're going to try to get to as many of them as we can at the end. But do know that whatever ones we don't get to, we're going to be responding afterward. So like I said, go ahead, put them in, don't hesitate, and we'll try to answer as many as we can today. Today with the panelists, we have Dan Cruzy. Dan is a licensed certified public accountant, and he's been practicing public accounting for more than 20 years. We also have Henry Rinder. Henry is a licensed certified public accountant in New Jersey and New York with more than 30 years of public accounting experience. And we also have with us today Michael Singer. Michael is the managing partner in the law firm of Commodore Singer, Baseman & Braun, LLP, and he concentrates in the areas of estate planning, estate trust, and guardianship litigation. And with that, I will pass things along to Henry, who is today's moderator for our panel.
Thank you very much, Amanda, and thank you, Michael and Dan, for being on a panel with us, and thank all the audience that is listening to us today. I hope everybody and the families are safe and healthy. These are very hot topics. We were talking about many calls that we are receiving, and Michael's law firm is receiving on this topic. So we will try to address the most pressing questions as we go through today's webinar. First, then we'll kind of go over the Payroll Protection Program itself, what it covers, how the application process works, what amount you should be receiving, what basically is your eligibility as far as the amount is concerned. Then the flip side of it is what amount can be deemed a grant when you apply for forgiveness, and how that amount is calculated. And also we'll talk about somewhat, how to track your expenses, your documentation, your support on both ends. In other words, eligibility and then forgiveness application. Surely we have some other heated sort of areas that pertain to this Paycheck Protection Program that has to do with the expenses that are matching the forgiveness amount deductible, and what is the story about the SBA talking about examining, auditing all the loans of $2 million and more, and basically giving us a new deadline, a recent deadline of May 14, for people to return money if they feel that they are not eligible for some reason, or that simply don't want to take a risk of facing the SBA examination. With that said, I'm going to turn over to Dan Cruzy, who will go to the first slide and discuss sort of the parameters of the Paycheck Protection Program. Dan?
Okay. I think most entities have already filed for the Paycheck Protection Program, but if you have not, or if you have filed and you're still not really sure of how much you're supposed to get in an original loan, that would be 2.5 months of what your average monthly payroll costs were. And there was some complexity about what the definition of payroll costs are. Payroll costs are basically the same as the definition of compensation. That would be wages or salaries plus medical benefits plus pension benefits and state and local payroll expenses, such as uninsurance premiums. That amount that you would have, that would be an average of the 12 months that occurred prior to receiving the money, or when you actually file the application. You get a monthly average, and you would get 2.5 times whatever that amount is. The amount that you will receive is first as a loan, and that would be 1% over 2 years. So just if it's just a loan, piece of loan is a pretty fantastic piece. The loan payments are deferred for 6 months and up to 1 year of deferred interest payments. Next slide, please. Okay, so the amounts forgiven, the date that you start out with the forgiveness date is the date that the bank actually distributes the funds. This whole program is done through one of your banks. You go to your bank and you get the loan. They actually do the work for the Small Business Administration. And also in getting the loan forgiven, you also do this through your bank. Okay, so this is done over an 8-week period. You're going to have to calculate your expenses, your qualified expenses that occur from the date that you received your funds for the next 8 weeks, and you will have to compare the amount that you received in the loan to how many qualified expenses that you had that you're going to pay in that period. All right, next slide, please. Okay, so payroll costs, all right, as I had said, in the forgiveness are going to be the 8-week period of your payroll costs that you need to spend. You could spend the amount on payroll costs. You could spend it on mortgage interest that also includes personal interest, such as personal property interest, such as business equipment interest. You could spend it on utilities. Okay, you could spend it on rent. 75% that's going to be forgiven has to be spent on payroll. The other 25% could be spent on what would be considered business interest, utilities, and rent. Now, there's a different category when it comes to how much you can count for each individual. Schedule Cs, partnerships, S corps, and C corporations are all calculated differently. If you are a corporation, either an S corp or a C corp, a person's salary is $100,000 plus their what would be considered their fringe benefits. So it would be their medical costs, their pension costs, and again any state and local expenses you might have. So it'd be $100,000 plus those amounts on top. That's if you are a C corp or an S corp. The same goes if you are an owner because you receive a W-2. If you are a partnership, you can only have $100,000 for a partner. You cannot get the extra fringe benefits such as medical or pension on top of that. The same goes if someone is going to file a Schedule C. You will only be given a $100,000 credit for your salary, not the extra benefits above that. Next slide, please. Okay, so payroll costs do not include federal employment taxes, such as FICA and FUTA, okay? It is basically what it says. It starts off with your salary and your wages. You do not get to add on top of that federal taxes. You also cannot count in any of the qualified sick leave wages or qualified family credits that are received through the payroll tax credit. Also, in addition, independent contractors do not count towards payroll. These people who are independent contractors, they must file Schedule C and they can go and apply for the PPP loan program themselves. Next slide, please. Okay, so non-payroll costs. You must spend 25% if it's going to be forgiven of these funds on payroll. The other 25% can be non-payroll costs, such as interest payments. There's been some controversy on this too, but here's how it comes out. As long as the loan existed before February 15, 2020, you can get interest payments on mortgages. You could also get interest payments on other business loans that involve most likely business equipment. That will also be deductible. Also included in that is rent payments. The obligation had to be enforced before February 15th. And also utility payments that include distributions of electricity, gas, water, transportation, telephone, and internet access. All these contracts had to be signed and in place before February 15, 2020. Okay, next slide, please. Okay, so You go and you calculate from the day that the bank distributes the funds to you over the next 8-week period. You count what your payroll costs are and your other qualifying costs, which again were the utilities, the rent, and the mortgage interest payments. That's how much you will be able to be forgiven on the loan that you receive. However, there are 2 other tests that you have to go through. And one of them is a headcount reduction test, and the other is a salary reduction test. The headcount reduction test is reduced proportionately, and the salary reduction test is reduced dollar for dollar for any salary that has been decreased below 25%. So to set up an example on how this is done, let's say that we have a company called XYZ, and all they have are 2 employees. Both employees are paid $30,000, so they have a total salary of $60,000. $60,000 divided by 12 months times 2.5 would give them a loan of $12,500. We now go through and apply the 2 tests, the headcount reduction test and the salary reduction test. If one of those employees was laid off in that 8-week period, okay, 50% of that loan would not be forgiven. So the loan amount was $12,500. Now your forgiveness amount is only $6,250. If the last employee, the second employee who was still employed, their salary was reduced from $30,000 to $20,000. Well, $2,500 is less than 75% of $30,000. And so now your forgiveness amount would be reduced from $6,250 to $3,750. So there is a 2-pronged test that you have to be conscious of. The whole plan is to have these funds actually paid for payroll, and if they're not paid for payroll, or if they are reduced payroll amounts in headcount or in salary amount under 25%, it will be reduced, the forgiveness amount that you will receive. Okay, next slide, please. Okay, how do you apply? Well, it's the same way that you applied when you went to get the PPP loan. You went to your bank. You go back to the same bank that you dealt with. And within 60 days of you providing documentation, showing documentation of full-time employees, documentation of wages that were paid, documentation of interest payments that were paid, possibly with checks or wires, and the same when it comes to your rent and your utilities. That is the way that it is done through the bank, and the bank should give you an answer within 60 days of whether your loan is forgiven or not. Okay, next slide.
So I guess then we basically covered the how do you get the loan, and then how do you apply for forgiveness, which brings us to the really difficult questions. And I'm delighted that Michael is here with us. So automatically on the reduction, one question came to mind, and perhaps I'll ask Dan first, and Michael, you can pitch in if we don't have a clarity on this answer. But in a reduction, the headcount reduction, we are getting a lot of questions from our clients on what constitutes a full-time equivalent. There is a reference to full-time equivalent in the law, and we've seen several definitions of that. And what is the final rule on this? What do you have to do when you have part-time employees in combination with full-time employees in order to accurately calculate your full-time equivalent headcount for purposes of the forgiveness application? Dan?
That's a great question, Henry. And the answer is there is no official answer on what the definition of a full-time equivalent is. I have seen 40 hours. I've seen 30 hours. The AICPA submitted recommendations that said that it should be 30 hours based on the Affordable Care Act definition of what a full-time equivalent is. But that was a different administration. there has not been set yet by the U.S. Treasury or the Small Business Administration of what a full-time equivalent is. Right now, I think you could probably use 30 or you could use 40. The way to look at it is, in the last example I had, if you have two part-time employees and they both work 20 hours, that would be equivalent to one full-time equivalent person.
Got it. Michael, what are your thoughts on this?
I think Dan's got that exactly right. We continue to have difficulty with this program because you have several different agencies and people making comments about what the definitions are of different things. We have seen contradiction between Treasury regulations, the SBA, senators who have decided to comment on this. And there's a lot of concern about what the rules are going to be. The FAQ, which is what the SBA issues, has been updated several times, and it seems to be on the fly. And in all fairness, the questions were going to come after the fact anyway. So I think we'll get guidance, but I think Dan's answer on this question is exactly right. We don't know.
So, Michael, let me give you a real difficult question that we are confronting it every day since this whole idea of SBA audits of PPP loans came into play, and some of the senators and press started talking about companies that have liquidity and maybe they are not eligible, and so on and so on. So when our clients and other borrowers of the PPP loans applied, they had to certify as to the uncertainty of the economic conditions, which made it necessary for them to apply for these loans to support the ongoing operations of the business. Now, this is somewhat subjective because they are sitting down at certain point in time and making this determination in their own judgment. So what is your take on eligibility in view of this certification, and especially for people that run businesses that maybe are doing relatively well even during COVID-19 period, and perhaps have some liquidity access outside of the PPP loan relief? Michael?
That has been perhaps the hottest issue in the last 10 days. And it came to the forefront when we found out that companies like Ruth Chris and others had taken the PPP loan and had sufficient capital reserves, and everybody went crazy. Now, when you applied for the loan, and some people applied right out of the box, you actually have to make a certification, as Henry said, that current economic uncertainty makes this loan request necessary to support the ongoing operations of the applicant. And when this pandemic hit, there was question. Was my business going to be able to collect its receivables if I'm a professional practice? Would clients stop paying? Would clients stop utilizing my services at all? What happens if the business owner or the key people die, contract COVID and get very sick or die? What happens, to a medical practice, for example, who is doing elective surgery and they can't get to the hospital for the next 3 months? And all this uncertainty made everybody crazy. Now, remember, one of the things that was paramount in this program was that the PPP was offered because the government wanted to keep people off the unemployment rolls as much as they can. You saw today, of course, that we have a record unemployment roll in our country as of this morning. So when the PPP is applied for, it's not just because you had need, it's because you wanted to keep every employee. And there's not a business out there when the pandemic hit who didn't think about furloughing employees or making massive cutbacks. So the FAQ's question 31 with the certification made everybody crazy because the penalties are gigantic economic penalties and jail time. The deadline to certify, to give back the loan, there was an amnesty, if you will, and you were allowed to give back the loan through yesterday, was extended to the 14th of May. And the SBA in FAQ 43, which was published a couple of days ago, says that they are going to provide guidance prior to May 14th as to what this means. Now, remember, the audit criteria was going to be for any company who took more than $2 million, there was going to be an automatic audit. And there are so many questions. And compounding that, you had Senator Rubio, who wanted to grab the microphone, and he said that he believed that any company that had revenue to cover its operations would be ineligible for the PPP. Well, how do you know? How do you know what your collections were going to be? How do you know what was going to happen? Senator Johnson wanted to tailor this to whether or not, comparative to the year before, did your revenue increase or decrease? If it increased, then less loan would be forgiven. If it decreased, then you would be fine. But this is all, as we said in Louisiana, this is all lagniappe. There's no law, and there's a lot of different opinion about this. I think that one of the things that companies do is that they make a plan. They'll make notes when they take the loan or even afterwards as to why they did it. What factors went into their decision to take the PPP? Was it because they have a few principals, for example, who were the rainmakers? Was it because they were facing massive reductions in employee rosters? What was it that made you take that loan? You don't know going forward. What happens if your revenue goes up? Think about the estate planning practice, for example. We have an election coming up in November. What happens if President Trump loses and President Biden in November does the anticipated, which would be to accelerate the estate tax exemption reduction back to $5 or $6 million? We will have a tremendous number of people who will be doing massive estate planning at the end of the year to use their exemption, and revenues of law firms, estate planning law firms and CPA firms might spike. Does that mean that you're going to jail because your revenue went up? How do you know? The uncertainty of these retroactive kind of armchair rules makes it very difficult, because when people applied, it was because of two factors. One, we wanted to keep people off the unemployment rolls. And second, there was so much uncertainty. So I think for companies who had tremendous capital reserves going in, they need to look in the mirror and think about returning the money. But for normal businesses, maybe not as big an issue, but I hope we get some good guidance before the 14th of May.
So, Michael, I'm just thinking in terms of what the law actually is, and thinking about the narrative in a congressional record before the statute was passed and signed. And so from that perspective, it's pretty clear what the law is. And yet you see these government agencies coming up with new rules that are absolutely, completely outside of the four corners of what the statute and congressional record was. So what's as counsel to your clients and us CPAs, as counseling our clients on this issue, what should we be telling them about what the law is?
Well, as Dan said before, the law is uncertain. The certification was in good faith. A lot of us who applied for those loans and our clients made the certification weeks ago before anybody even started talking about this. And now you're faced with this dilemma, because the partners, the person who certifies the loan, has this sort of Damocles, if you will, hanging over their head. Am I going to go to jail because I didn't do as badly during this period as I thought I was going to? I don't know the answer any more than anybody else does. I agree with you, Henry. I think that the commentary from legislators that the even the FAQs have gotten outside the initial premise. But again, what happens is a law is passed, people take advantage of it who shouldn't be in the program to begin with, and then you get a lot of regulation, much like we got with the Stark laws for medical practices years ago. We tell clients, make notes, write down, what you think was going on. Why were you concerned? Were you thinking about layoffs? Were you thinking about a principal getting sick? Were you thinking about receivables? Were you thinking about the office being closed and your ability to work remotely? All those things that you can document, you should, because there's going to be an audit. So Dan talked about before the process of the forgiveness of the loan. He did a great job talking about what gets forgiven. It's payroll costs, qualified rent, and qualified utilities, and 75% has to be salary. What's that audit going to look like? Well, for my understanding, and by the way, there are no rules about this because I talked to two banks yesterday. The banks are going to do the initial review. Will the SBA then sign off on the bank's review or do a secondary review? Will they only review those over $2 million? And what do you need to prove? The banks I spoke to said that candidly, if you can prove to them that you use that money for the 8-week period and you meet the qualifications, the 75% of payroll, qualified utilities, and qualified rent, to them, they don't have any interest in looking any further. That's what I've been told. By the way, Henry, I think that's the right answer. But we don't know what may come up. We are now up to FAQ 44 in the last pronouncement. This is the third version of the FAQs. My guess is by the time we get to forgiveness, there may be 440 FAQs.
So let us step into another minefield that kind of opened up in this space, and the IRS, which was the IRS communication as to the expenses that are being paid with the proceeds, with the forgiven proceeds, or proceeds yet to be forgiven, and deeming those non-deductible for purposes of federal filings of tax returns. Michael, what is your take on that position?
Here again, we have conflict and controversy. You have the Treasury issuing regulation that says, even though the normal rule is you can deduct these expenses, we're not going to allow you to do that. And the thought makes some sense because you say, here's money I got for free, and to be able to deduct it as well is a windfall. That was the Treasury's position. However, the senators who, not the same senators, not Rubio, not Johnson, immediately said, well, wait a second, our goal is to provide gigantic relief. This is a very serious situation. So we think you should be able to deduct it. And right now, you have the Treasury regulation, but you also have controversy. My guess is, and I hope, and I'm interested in Dan's thoughts as well, is that by the time we file returns, we'll have some better answers. But some people are advocating that when you go to file your return, if there's no guidance, that you ought to make a protective claim on your return when you file it.
Dan, what are your thoughts on that suggestion?
Well, my thoughts are that the actual statute, when it came out, it was drafted by Congress and actually was recently supported once again by Senator Grassley, who's in charge of the Finance Committee for the Senate. It seems clear that it is non-taxable. They say that the forgiveness portion is a non-taxable event, but the IRS now waits to come out with a revenue procedure after the second funding takes place. They could have come forward before the second funding was voted on, and this could have been addressed, but instead they come out afterwards, then saying that the expenses that are taken for the forgiveness portion will not be deductible, in essence, reversing it around and making it a taxable event when you do have it forgiven. So I guess it's going to be fought out most likely in the courts, or hopefully if there is another bill passed that they'll wind up addressing this and having it addressed by Congress, hopefully.
Thank you, Dan. Thank you, Michael. We probably might have a time for just one question. Amanda, what's coming from the audience? What sort of questions? Can you pick something that's most common, most frequent?
Yeah, so we had actually like 4 people ask the same question, and there are a lot of really good ones in here. I wish we had time to cover more of them. But this one, when I know this has come up previously as well, is whether or not, and clarification on what transportation expenses include. So does that include gas? Does that include a lease on a car? Does that, extend to employees? Can employees switch their current, car leases to the company lease so they can use some of that PPP? Should they get their employees, gas cards? What are your guys' thoughts on that?
Dan, you want to take a stab at it?
Well, I think all the items you just mentioned should fit into the category of utilities. Do they specifically address those, what it is? No. But if you go through, when they do give the definition of utilities, it's a pretty expansive list. They just don't say utilities. They do go into even talking about internet service. So I believe that you would be able to qualify for that under utilities.
I'm a little concerned about the new lease on the automobile because there is a specific date in the statute that the contract was supposed to be in existence prior to the rental contract prior to that date. I don't know if
February
the new
15th.
leases would necessarily be eligible, but Michael, what are your thoughts on that?
I think that Dan's right. I share your concern, Henry, about a new lease, but again, we don't know for sure, but I think Dan's sense is probably right.
Wonderful. Amanda, do we have any more time, or are we at the end?
Yeah, we could probably fit in another couple. Looks like there's still a lot of people on. So if you guys are okay for a couple more minutes, maybe we could try to cover. I have a feeling these probably apply to other people as well in here.
All right, so let's hear another question.
So this, going back to the people that might have taken out, that $2 million in loan, PPP money, if they received more than that, the question was, should they do a partial repayment on the net loan to make the outstanding balance under the $2 million and avoid the mandatory audit, or do you think that would just kind of raise a red flag?
Michael?
I've had that question before, and I've had the question as well. Can I give back half or piece? I think my personal feeling is that giving back money to try to reduce the loan below $2 million is a bit of a flag. I don't think it's going to help an awful lot. Candidly, I think it almost invites more scrutiny. But again, we don't know what the audit requirements will be when we finally get there. I don't particularly think that's going to help out a lot to reduce it to below $2 million. Can it hurt you? Maybe, maybe not, but I think it's going to draw attention to you.
Dan?
I agree. I think it's irrelevant. I don't think it's going to help you in doing that.
May I suggest one other perspective on it? If you originally filed and got qualified for items that were subsequently deemed not eligible, I think there were some issues. For example, with the disability insurance, and whether permanent disability qualifies, short-term disability qualifies. So there might have been components in your eligibility amount that were subsequently deemed not to be eligible. And now that you know it, could you go and sort of recalculate your original eligibility amount, and to the extent that you took too much money, pay that back? Michael?
I think that's your best justification, Henry, is that you say, now that we've calculated the amounts, the payroll costs might not be what we think they're going to be, because I think the biggest hurdle, the most obvious roadblock to forgiveness is that you don't meet that 75% with the salary. And a couple of other things that people have asked about. People have asked about, should I prepay my rent for the next several months? No, don't do that. Should I fund my obligation from last year to pay my pension contribution for last year, this big number that's sitting there during the 8-week period. No, don't do that either. Make it as easy as possible during the audit. Some people suggest keeping a separate bank account with the PPP proceeds for the audit to be very transparent and easy. Do not invite scrutiny by making large payments. Also, stay away from big bonuses during this 8-week period as well.
Amanda, let's take a look at another question.
Yeah, so I think these two questions kind of go hand in hand. So one kind of relates to what you just said was, you know, can we pay someone their annual salary or 6-month salary in bulk right now? And two, what happens if employees decide to stay on unemployment, you know, based on the fact some of them might be collecting more on unemployment than they currently are while working, you know, full-time or part-time? What are the options to kind of get rid of some of that PPP money and reduce the liability for repayment?
Michael?
So,
Dan, you want to take this?
yeah,
Sounds
so
like
if
you
the
already
question
jumped in.
is what happens, and I have been asked this question quite a few times, and it's actually in the Q&A, and the Treasury actually does deal with it. What if you have a bunch of employees who were laid off? Now they have unemployment, and you decide to bring them back now during this 8-week period, and you call them up and you invite them to come back to work, and they say, no, I'm enjoying my unemployment, I'm not coming back. What do you do? Well, you document that this is what the person did, and that head count number will not drop. That will still count as having a head count person, and that person that basically said that they're not coming back, they don't qualify for unemployment, and if they get audited, I believe they're the person that's actually going to be the person that's going to be in trouble, and it would still count as a head count person. That's in their Q&A.
However, the payroll cost would not help you with your payroll cost in that regard because you're not paying that person, correct, Dan?
That is true.
Yeah.
Agree.
One more question, Amanda, and I think we're going to come to an end.
Yeah, so one good question that we had was, what happens if a company would rather use the funds for items that aren't forgivable? So let's say they're okay with having the funds not being forgiven because the terms are so good. Does that present any kind of issue in terms of the auditing amounts if they wanted to use the money, you know, as a means of refinancing instead of paying, you know, 75% or whatever it is on the salary?
Well, keep in mind, you're still supposed to pay the expenses on payroll, utilities, rent, and interest. So you could use that for those same categories that maybe extend beyond the 8-week period, and you're still using it. But you can't just go and use it for any working capital item that you want to use those funds for.
I agree. In fact, I think that's a two-headed problem. First, you're going to be paying back the loan, and the loan can be at an interest rate up to 4%. The banks had to pay 1%. There was 1% fee, the SBA fee. But the bigger issue is I think that you fail the certification test, then you really risk it. If you're not using the money on payroll and the qualified expenses that are there, and then you say, well, we'll just pay it back, I think there you may fail the FAQs under the SBA guidelines because you really didn't need the money for the purposes set forth in the loan. I agree with Dan. I think that that's absolutely a no-no.
Well, thank you very much, Michael and Dan. Terrific job. With this question, we're going to wrap up the webinar. I wanted to thank the audience for attending it in good numbers. We actually had a lot of interest in this, and plenty of people stayed on with us, even past the 30 minutes mark. And Amanda, thank you very much for hosting. And again, appreciate it, and good afternoon to you all. Have a great day.